When you invest in funds, you want to pick those that find the long-term big winners and hold them to capture all the gains. So let's have a look at that phenomenon using Nvidia as a recent example. Now, you might not like Nvidia and you might think that actually these are funds to potentially avoid if they have it as a large holding, but I think you'll enjoy the process of selecting the correct funds for your portfolio. First up, we're going to look at funds that hold Nvidia, their exposure to it, and when they first bought it. Here we have Scottish Mortgage. It first bought Nvidia as early as July 2016, and the current portfolio weighting is just under 8%. So it was quite an early buyer of Nvidia. Baillie Gifford Long-Term Global Growth is the sister fund of Scottish Mortgage. Its number one holding is Nvidia, weighting 8.35%, first bought 30th of April 2017. JP Morgan Global Growth and Income joined the party much later, only buying Nvidia at the end of May 2023 and with a holding of just over 5%. Allianz Technology Trust first bought Nvidia October 2019. The holding is now just over 9.5%. Polar Capital Technology bought Nvidia as early as October 2016. The current portfolio weighting is 10.4%. Guinness Global Innovators, Nvidia ranks as the fourth largest holding, coming in at about 4%, first bought October 2014. L&G Global 100, a bit late to the party with June 2023 when they first bought it, because they do have some funny rules as to what they allow into the portfolio, but a chunky holding at 10.5%. Blue Whale, quite a lot of chopping and changing on this portfolio. First bought Nvidia June 2021, holding 8.75%. That leaves things like Linsell Train and Fundsmith, which, as far as I'm aware, have never held Nvidia. So if your fund manager is a bit of an old fart, you might want to consider whether you actually want their funds in your portfolio, because they might not be able to keep track of modern trends. To find out which ETFs hold Nvidia, we go to the justetf.com website. We type in Nvidia and it pulls up basic data on the stock, its amazing share price. We come down here and it will tell me which ETFs hold it with the greatest weighting. So number one, we've got a semiconductor ETF. That's not really surprising. Come down, we've got some information technology ETFs with Nvidia at about 20%. And then we have some factor ETFs such as WisdomTree US Quality Growth, where Nvidia again comes in about 10%. VanEck Semiconductor seems to maybe cap the top holdings, so that's why Nvidia is coming in quite low on that one. And then we'll get stuff like artificial intelligence coming in, S&P 500 with some factors in on it. You basically keep scrolling through the list and you'll see which ETFs are under or overweight compared to things like the NASDAQ or the S&P 500. This shows that there are lots of funds potentially overexposed to Nvidia, and they could suffer a setback if the Nvidia share price falls. Such funds should be regarded as having a portfolio time period of 10 years plus in our portfolio structure matrix that I use when I'm coaching clients. So long as you're aware of the exposures and the risks involved, you should be able to hold on to these funds. So now we're going to look at the performance of those funds, not just the straight price growth. We're also going to consider volatility in the mix. First up, we have Scottish Mortgage. The performance isn't that great because it made a massive high back in late 2021, but has yet to come anywhere near that. So the duration of the drawdown is too long for someone looking to sell down this fund and generate returns for their retirement. If we compare Scottish Mortgage to its sister fund, Baillie Gifford Long-Term Global Growth, we get slightly better performance from the latter because it doesn't have such high exposure to private equity, which is currently holding back the performance of Scottish Mortgage. Now we compare Baillie Gifford Long-Term Global Growth to Blue Whale, which is the blue line. So with Blue Whale, there's a lot less drama, a lot fewer wacky companies in there. Blue Whale is currently at an all-time high, but actually the total growth is slightly higher with the Baillie Gifford fund. So now we've compared it to Guinness Global Innovators, an interesting fund that's probably more closely matched to Baillie Gifford Long-Term Global Growth. And the Guinness Global Innovators, again, less drama, an all-time high, and it has actually beaten the Baillie Gifford fund. So now what happens if we compare Guinness Global Innovators in the orange to the NASDAQ in the yellow? Well, it's a clear winner in terms of the NASDAQ, which has lower fees, slightly more diversified with more holdings because it's market cap weighted. You always get the winners, so it makes me think that maybe active funds aren't such a good idea and that you can get decent growth with a passive fund providing you're tracking the right market. And now here's Guinness Global Innovators compared with a top technology fund, Allianz Technology Trust, in the blue. So the blue is more volatile. You've got the price to net asset value cycle to consider. The blue line does slightly beat the orange, but the orange is a bit more stable. For me as an older investor, it's probably a little bit more my preference. And then also with the Allianz, you do have a performance fee, which is a bit frustrating because it can eat away at your returns. So I would look at the Sharpe ratio, the risk-adjusted returns rather than the overall returns, particularly if you're in a drawdown phase or nearing a drawdown phase of your investments. As we start to bid farewell to Royal London Global Equity Select and look at other funds, there's quite a few on Pick a Fund. There's this Mercer Passive, but it says no platforms available, so that's no good. Then we've got Guinness Global Innovators, which is useful. Fidelity Fast Global, bit of an odd fund. Maybe I'll profile it one day. The good old L&G Global 100 is amazing. This Titans 50, yeah, it's very similar kind of thing. And then the excellent JP Morgan Global Growth and Income. So the funds that we've talked about in the past, you can look them up on my channel, are all still worthwhile pursuing. If you're interested in portfolio coaching to help you put together a portfolio that meets your investment objectives, just go to my website, ianshadrack.com.